Hey everybody, this is Jose Blasco. We are about to get started in just a few seconds, 40 seconds or so. Let's have a sound check, as we always do. It would be great to confirm that you hear my voice. I believe all is good, but again, it's always good to confirm from your end. Ahmed, how are you? Good to see you. Good to see you hear me well. So we are ready to get started in just a moment, guys. 20 seconds to go. Also, I would appreciate on the public streams such as YouTube and so on, if you guys could also confirm all is good, so I know there is no reason to delay the start and we start on time. In the meantime, I'll put myself in the bottom right corner of the screen so I can say hello from here. Hello everyone. It's time to get started. Okay, sound is good. We are live. Welcome everybody. Today is May 26, 2021. Welcome to Options with Options. We're going to be looking at the markets. We're going to be putting options plays together. The beauty of options is that they give you options, as the name of the session suggests, as I always say, because I love it really. And the idea is to really understand the market conditions, adapt to them, putting trades of a high probability, manage the risk at all times, because even with high probability, you can still lose money. This is trading, isn't it? So we want to make sure that risk is under control, and with that in place and some trade management on top of it, the idea is to collect as many profits as we can. With this said, I would like to highlight the disclaimer on the upper left part of the screen. Please read it carefully. This is important information. I need to clear my throat, guys. Just 1 second. Sorry for that. Here we go. That gave you time to read the disclaimer, isn't it? So hopefully it's all understood when it comes to a disclaimer. So we talk about the agenda now. So we're gonna start with a quick hello everyone, what we just did. We're gonna begin the session, which is simulcasted. This means that we are in different places at the same time. You can find us in our private room in our website, tradewithufos.com/live. But apart from the private room, you can also access the sessions using YouTube, Facebook, and other public streams at times. The thing about the public streams is that the duration of the sessions is limited, normally half an hour or so, where the duration of the sessions in the private room is full duration. And therefore, that way, for the ones of you that are very serious about trading and are super passionate like me, and you always want more, always never got enough, so I recommend you to look at our website, register for a coaching plan, and then you can access the private room and enjoy the full duration sessions. For the ones of you that are looking at trading from a let's say a part-time point of view, then YouTube, Facebook, and so on should be good enough, because the content of the sessions is the same. Really, it's not that we keep a secret sauce, because there is no such a thing. Okay, so we're gonna be working with you guys, and again, I do appreciate interaction. How are you, Joanne? Good to see you. I do appreciate very much interaction, so please do not be shy. Both on the public streams as well as in the private room, and interact with me. Questions, answers, suggestions, anything, guys. Let's communicate efficiently, guys. We're gonna start with the session. So we're gonna be looking at the market, reviewing the trades that we have. We have some work to do with the trades that we have. We have 3 trades running. The 3 of them are showing profits as we speak. So we have some management to be done, probably to lock in some of those profits. So we'll see that together. And then we'll be looking at planning new trades, in the market based on the current conditions. Okay, so let's go for it. Let me click here on TradeStation so we can see TradeStation. And let me start with looking at the market. So I am loading the chart of the SPY. Okay. By the way, sorry, I typed the wrong symbol. SPY. I was missing the P. Okay, here we go. So, by the way, we had some issues in recent times with the earnings app in TradeStation. There has been an update for the earnings app, and now it's working fine. So, that's a good thing to see. Yes, of course, Joanne. We miss you if you're not here. So it makes the session definitely, much more, complete, if you wish. Okay, so we feel we are all here when you're here. Very good. Anyway, I was saying that the earnings tool that I normally use on the bottom left part of my chart, okay, that earnings tool here, that was not working well. Now it says no data available, but this is because it's an ETF, so there are no earnings. So that's actually fine. So this tool is now working well. If you are using the tool and it's not working well for you, so just go to apps on TradeStation, select Trading App Store Updates, okay, and the moment you do that, you will see the app somewhere in here, which is here, next earnings date. So you will have a button here next to it, which is update. Okay, so you can force the update if you have not updated it already. Okay, cool. So anyway, what's going on the S&P? Well, didn't we talk about it? We are in an up climate. Okay, 4 candles out of 9. This is what statistics were suggesting. We came down, hit some UFOs, get back up, creating UFOs on the way up. There is only one UFO left before we start making all times high again. Okay, so definitely, ready to position ourselves to take advantage of a potential all-time high situation. Now, when that's happening, typically the prices of options become cheaper. Why? Because people are very relaxed. People perceive nothing's gonna happen, and now we are back with a VIX of 18. Okay, came to the UFO, bounced from there, but again, it's still pointing at 18 with multiple red UFOs above. Okay, so definitely looking like we are in the bottom end of the range, and as you will see later, when it comes to non-directional trades, okay, today the way I run the scanner what is in order to find opportunities. Notice I selected bottom and implied volatility less than volatility standard deviation. So, looking for very cheap options. That's what I'm looking for to put together, again, double calendars and trades of that sort. Okay, so we'll be exploring those different possibilities. Okay, guys. But before we get into that, we have trades to review. Okay, I'll start with the bottom one, which is a quick one to review because there is nothing to review. So with Datadog, we had this trade. A beautiful thing about the climate is that it tends to expand. So, what we expected to happen happened with that stock, keep rallying up. But for us to get into the trade, we needed first to drop into this UFO where the purple line was. And as you can see, that never happened. So this is a trade that we planned last week. We didn't get a feel. I left it here so we can review. But to be honest, there is nothing to review. The only thing to review is, again, maybe to become a bit more sensitive of the power of understanding the climate in the market, so you don't fight the market by getting into trades where you are on the wrong side. So when the climate is showing you blue, being a buyer gives you a statistical advantage. It doesn't mean you will make money every time, but having the stats in your favor has a lot to say. And therefore, we can see that climate expansion, which helps a lot when you see it, to build your confidence about your trading and the tools that you use, which is important to be a good trader. You have to be confident, okay? And confidence is not teachable. Confidence is the product of practice and gaining experience, isn't it? Anyway, so the 3 trades we're going to review are starting with TIM, okay? And let me show you those trades first on TOS. Okay, let me show you those trades first on TOS. So on TOS, you can see we got TIM pointing at $87 of profit right now. PayPal was showing some profits. Now it's showing a little bit of a loss, okay, but it was showing some profits earlier in the day. So I guess the stock has moved. We'll take a look at that. And MasterCard, okay, which is also showing a little bit of profits. Okay, so starting from TIM, if I expand TIM, really what we have here is a trade where you can see it's all the same expiration date, all June 18, and that's basically telling you this is an iron condor. Okay, so what's the expectation for that stock? Well, the expectation for that stock is to remain in the range, okay, and the range that we set is the purple area going from 254 to 187 with the expiration date being June 18. Okay. So this is what we've got. Okay, now what's going on at this moment in time where the stock is indeed in the range? Okay, the stock is indeed in the range. If I bring OptionStation Pro, we can evaluate this much better. But the one thing that we need to evaluate is not only the stock being in the range, it's is the stock likely going to stay in the range? That's the real question. Again, we don't have a crystal ball, but we can run stats and evaluate the UFOs, because that would tell us a lot about the fact that that stock is likely going to stay in the range or not. Okay, so let's go ahead and take a look at TIM. Okay, let's go ahead and look at TIM. Here we go, and we can see that currently it's showing in the theoretical P&L here $113 of profit. With TOS it's showing 97. Why is the difference there? Well, because the theoretical P&L means that you always get filled at the best midpoint, where TOS in the simulated account gets you filled at the midpoint, but when they evaluate the P&L, they assume you're gonna get filled at the bid price when you sell, or at the ask price when you buy. So in this sense, there is a spread component built in that P&L, and that's why the P&L shows a bit less. Okay. In any case, 113 is our reference, so the trade is going well. But with all of this said, we can reassess. Remember we said we want to know if that stock is likely going to stay in the range or not. And with that said, we can see that -1 standard deviation and +1 standard deviation points at 253 and 210. And the question is that still within the range or not? Okay, so I would say probably 210 is within the range. Okay, the 253 I'm not sure, and you know what, it is. Okay, so sorry, I'm just moving the wrong text, so let me do this here. Here we go. So 210 is here, okay, but 253, it's kind of like now teasing our upper solid line. Okay, so based on probabilities, we are still likely going to stay in the range. Based on probabilities, there is still a red UFO ready there to defend ourselves. Notice that one of the UFOs is gone, okay? The one that created this drop in price and gained some time for us. Thank you very much, Mr. UFO, but that one is gone. Price now went through, all the orders got filled. We still have one, and probabilities suggest that we will not surpass the dotted line. So at this moment in time, we are still okay to do nothing, okay? Tomorrow we're gonna get back together, and if TIM is going back down, great news. Because if it starts going back down, we may have a red UFO form. We may have, the statistics to bring the dotted lines back inside the range. We may get into the weekend, accumulate another weekend of time decay. All of this is great news. But if TIM pushes higher tomorrow, so now the issue is that the dotted line will surpass the upper line, and we're gonna have to do a roll. Okay, so good news, we're gonna get back tomorrow together, so we will explore and discuss if that's something that we need to do or not. In the meantime, there is nothing to be done. All looks good so far. We are collecting that amount of profit, which, by the way, for the conservative traders within you guys, the total credit collected on this trade is 175. Okay, some of you have a rule, which it's not a rule I like to use myself, but I could understand some of you use it or feel comfortable using it, which is when half of the profit is made, you close the trade, and half of the profit is $87. Right now it's pointing at 113. So one option is go ahead, close the trade, and congratulate yourself and find a new one. Again, I prefer to leave the trade open to make more money if possible. Plus, we're gonna get into trade management with the intention of locking in better profits or diminishing the risk, or both, and potentially end up with a better result than just closing the trade. Okay. Also, notice that this is not a very liquid situation with 140 to 0.15. We may actually struggle when it's time to do some of the rolling. So we'll see what we do when we get there. Okay, so closing this trade, may or may not be possible at the midpoint, and therefore those $87 or 113, may be doable or may not be doable. Okay, so this is to be tried and seen, because every stock, is different in that sense. Okay, so keep that in mind, because again, the theoretical P&L it's as the name suggests, theoretical. Okay, we know with options. I made my point very clear last week when I talked about not using market orders, isn't it? So very, very careful there with slippage and phenomenons of that sort. Okay. With this said, we are back to TradeStation. The second symbol we need to analyze is MasterCard. So back to TOS. MasterCard is showing $29 of profit at this moment in time. When you look at the dates, it's also all June 18. So this is also an iron condor in case you don't remember. So when going back to the charts, to TradeStation in this case, and looking at MasterCard, we seem to be fairly well centered in the range, but again, it's not about the visual impression that we may have, because there are things the human eye cannot see. Okay, it's like the UFOs. Okay, the human eye cannot see everything about the UFOs because volume data, tick data, there are many things the human eye cannot see on a chart. Is that making sense? So same thing happened with the implied volatility of the options, which is the values used to do this one standard deviation projection. So you may say, oh, it looks like I'm going to stay in the range, visually speaking, but then when you run the stats, it's pointing at 347 and 389, and the question is, where is that? Okay, and you know what? It is within the chart, because 389 is actually somewhere here, okay, and 347 it's somewhere here. So far it's looking very good for us to end up in the range from now until the expiration. Okay, great. I mean, that's really a great news, and nothing to be done with MasterCard, just allowing time to pass and so on. We also noticed that we have a new red UFO overhead. That one was not there before. So again, this is an even better sign that, you know, at least to the upside, we will not go, or if we go, there will be resistance to continue progressing towards the upside. Okay, so increasing the odds of staying in the range. So all of this is good. So nothing to be done yet with TIM, nothing to be done with MasterCard. I would say probably, you know, unless a very big move happens, you know, the whole week, you know, nothing will need to be done with MasterCard. And now we are hitting PayPal. With PayPal, we may need to do something. Okay, we may need to do something, and let's take a look at that, because when we look at PayPal on TOS, that one shows negative $24 of loss. Okay, and that means that we may need to do something about it. Remember, this is not necessarily a bad thing. Okay, because this trade with PayPal, notice that it shows May 28 as well as July 16. In other words, this is not an iron condor. This is a double calendar, and therefore, how are you, Siderman? I'm just noticing your message. Okay. How are you, True World? Nice to see you. You were in the wrong session. How can you do this to us? Very good. Welcome to the session, my friend. So again, you can see two different dates. So in this case, we are working with an a double calendar, and therefore there may be work to be done with that particular one. Okay, so normally what we do when we look at these trades, okay, is we are looking at what we call distorted Greeks, isn't it? Maybe I got too many strikes here, so let me drop this to, hopefully 10 is good enough. So we are using May 28, okay, in this particular case for the options that we sold. The options that we sold are the 260 call and the 230 put. Notice it says the 260 call is in the money. That's the reason why this trade is showing some pain. Okay, the reason why it's showing some pain is because that option is in the money. Okay, so if you look at here, okay, we sold the 260 and we bought the 260 and we are trading at 261. So that option is in the money by $1.61. Okay, so that's why it's showing a little bit of pain. But it doesn't necessarily matter, or it may not be a problem at all actually, because okay, you know, the consequence of that is that maybe lots of the extrinsic value is gone, and therefore we're gonna be rolling. Okay, we're gonna collect a loss, but then we're gonna collect so much more premium on the next expiration date that additional premium will actually offset the loss. Okay, so it's not necessarily a problem. So the one thing that we need to do, okay, we're gonna start with the 230 puts. the one thing that we need to do is first look at the Greeks to see if the Greeks are distorted or not. So I'm loading 30 strikes here to find the 230 put, which is the one we have. Notice that this has an extrinsic value of 7 cents, but funnily enough, theta shows 11. In other words, the theoretical calculations done by the simulation tool suggest that we got two days and a half to go before the option expires on May 28, and it assumes that we're gonna collect 11 cents per day, which is 2 times and a half 11. Okay, that would be like, let's call it 20 plus almost 30 cents, but the extrinsic value is only 7, so it's not possible. Okay, so that's what we call distorted. Okay, distorted Greeks, and therefore for that one, for the 230, we're gonna be looking at rolling it to June 4, which that one is gonna pay us 22 cents of extrinsic value, and that's gonna lower the cost of the trade and therefore the risk. Okay, so let's simulate that here looking at the put. Okay, so it's time to roll, my friends. Okay, the Greeks are distorted, so time to roll. So we're gonna create a rolling order, okay, and the rolling order is gonna be done by selling the 4th of January 230 put and buying back the 28th of May 230 put. Okay, now while we're gonna collect 22 cents, we need to pay to close the trade. So really the net credit that we're gonna collect if we do the roll is gonna be 14 cents, which to be honest is not that much, okay, but it's what it is, okay, and therefore we're just gonna do it. Given the fact that that stock, given the fact that PayPal has been going up, like going to the moon since we entered the trade, I am telling you that maybe 1 or even 2 days ago you could have done this roll. I don't know if anyone was watching it. Okay, please comment on that, guys, if you guys were watching this trade let's say a couple of days ago or yesterday, and please comment if you saw that those Greeks were already distorted 1 or 2 days ago, which I'm pretty positive, maybe not 2 days ago, but probably yesterday they were. Okay, so you could have done this roll a bit earlier, and then instead of 14 cents you would have collected a bit more. Okay, now 14 cents is what I'm gonna get, so let's go ahead and this custom trade, which is the original trade, I'm just gonna go ahead and duplicate. Okay, so I'm just gonna duplicate this trade. Okay, disable the first one. Okay, and what I'm gonna do with this trade is first I am going to change the 230 put. We're gonna make it June 4th. Okay, June 4th. And because we collected from this trade, wait a minute, how much when we did this trade? I'm not sure I documented this well. Let me see. Yes. So this trade was filled at, oh, sorry for that. I just clicked on the wrong place. This trade was filled at, 1 second. Here we go. So the trade price was 8.5, as you can see. Okay, so 8.5 there, trade price, plus 6. So plus 6. And then I collected 67 cents. And then I collected 2.28 cents. Okay, this is the result of this trade. So that was 11.55. Okay, and I believe I have it accurately. Yes, 11.55 is what I got. Okay, so if I got 11.55 in this trade, and now I'm gonna collect additional 14. So this is equivalent to this trade cost me 11.41. Okay, it's equivalent to the trade cost me 11.41 instead of 11.45. So what's the benefit of doing this roll? Well, the benefit of doing this roll, I'm just confirming everything. Yes, the benefit of doing this roll is that basically you are adding a bit more premium, you are lowering the cost, and therefore you are widening the range a little bit, and you are diminishing the risk a bit as well. Where now the most you can lose, okay, is 1,140 instead of 1,155. It's very little, it's very minor, hey, but that's what it is. Okay, so we are just gonna implement that change and collect that premium. Okay, So let's do that first, and then we're gonna talk about the calls, because probably we're gonna do that too. Okay. You have the mid price at 15 Maca, very good. So let's do that. And by the way, it's limited premium, okay? So 14, 15, it's very limited, okay? So just make sure that, you know, you're using with brokers, or you talk to your brokers and you really negotiate those commissions. Most brokers allow you to trade commission free for options, but at the same time, they normally charge a minimum per ticket, things like that. So just make sure that, you know, you discuss that, because of course, you know, if you're gonna pay, you know, let's say 5 cents to do this trade, so your 14 cents become 9, right? So then it may not be worth it to do it, and it may be worth it to wait for full expiration and do it again afterwards, just to avoid the commission, okay? So keep that in mind, okay? Also because, you know, here is 2 contracts traded, so it would be 1 commission per contract, okay? So I am assuming that you got commissions under control, because this is really a roll for almost no benefit, okay? It's very little premium, the one we're gonna take in, but we're gonna do it. It's part of the process, okay? So the order is in there, okay? And actually, I think I got filled. Yeah, I got filled on the roll. So now, notice that I got the 4th of June 230 put, okay? And the May 230 put now is quantity 0, okay? I got 22 minus 8, that is 14, okay? So we got this trade in, okay? So the first initial trade is gone. We are now in that second trade for 1141, which uses June 4th expiration, okay? So this is what we did with the 230 put, okay? Now, what about the 260 call? Well, same story. We're gonna go and check if those Greeks are, you know, distorted or not. So we're going to be looking at the 28th of May, looking at the 260 call, which is in the money, as we know. And when we look at the extrinsic value, it's 210. And when you look at the theta, it's 57 cents of theta. So if you take 57 cents and you multiply this time 2.5, okay, so that is $142, where the extrinsic value available is 2.07. So in other words, we got more extrinsic value to collect in the form of time decay than what you would get if you were to roll today, because the Greeks are not distorted yet, okay? Yeah, I was expecting maybe the Greeks to begin being distorted, but the fact that strike price increments here are $2.50 at the time instead of $1, make the 260 strike more relevant, and therefore there is more weight, there is more implied volatility attached to it, therefore more extrinsic value, and therefore, you know, theta is more relevant in this case. So we're just gonna leave it alone, okay? We are not gonna do anything about it now. We will review that one tomorrow. And I would say it's likely that tomorrow we may need to do the change. And if not, definitely I will give you instructions for Friday, because Friday for sure you will need to roll that one, okay? So notice that, you know, we are clearly below, and as, you know, we get the time decay kick in, okay? So we are likely going to see much more profitability to come in this trade as the gray line below travels towards the blue line above, which is the expiration date on May 28. Okay, so all looking good, even though temporarily speaking we see a little bit of negative P&L on that one. Okay, well actually now it shows minus 237. Okay, but why is that? Well, because you collected lots of premium, you locked in lots of profit from the initial trade, the initial sell of the the 230 put that was sold. I believe it was sold for 2 point something, and we just closed it for a great profit. Okay, so yeah, just reviewing everything on my screen. Yeah, all looking good. So that's it. Okay, so far we are good with the trade management. Nothing else to comment, and therefore it's now time to put some trades together. Okay, Maca will try 20. Very good idea to try a bit more and see. I mean, if the market was to fall and scare a little bit people, you may get those 20. So not a bad idea to try it. By the way, if you were to do the roll tomorrow, it's not a big deal either. I don't think you will get much more tomorrow, and today is not too much either. So there is no urgency to do it. So you can certainly try to get a bit more. Even if you don't get filled today, Maca, with 20, you can try tomorrow again. And in the end, if you don't get filled at all, well, you do it on Friday or even on Monday, and you just save yourself one commission, which may be the difference between 15 and 20. Okay, so again, no urgency given the fact that premium became so low. Ideally, you would have reviewed that yesterday or the day before, and probably that was the right time to do the roll. You would have got a bit more, okay? Cool. So I get a sip of water, and we are back in trading mode looking for trades. Thank you for that, guys. It was like 30 minutes non-stop talking, and I needed a little bit of water. Anyway, so let's begin with researching and looking for new opportunities like the one with PayPal. Okay, so I'm just sorting the list of stocks that I got after I run the non-directional scan. The one on the top is FedEx, so I'm gonna click on FedEx, load the earnings date, which is 6/24, and the first thing that we're gonna do is look at 6/24 and see if we have this arbitrage opportunity I talk about. So 6/24 is great because we have the earnings available here on 6/25, but it is not great actually because 6/25 has already a volatility built in of 34, where the front week only have 23. Okay, so that makes it invalid. Okay, that makes it invalid. We don't have that arbitrage opportunity. Okay, so we're gonna try the next one, BNTX. Okay, we're gonna look at the next one, and and BNTX, and we're gonna be looking at earnings on August 10. August 10, we don't have an expiration. It goes from July to September, so we cannot do this one. Okay, so we're gonna move to the next one, which is Billy. Okay, here we go. So we have Billy, Billy with no information for earnings. Okay, no information for earnings. So I'm just gonna skip it. Go for the next one, which is ATVI. Okay, let's see when earnings are gonna be for that one, which is August 3. And now we are looking at the option chain with ATVI, and we got August 20, okay, August 20 and July 16. Yeah, we don't have August 3. This additional expiration date will appear, relatively soon, maybe 2-3 more weeks from now, and those stocks that report earnings on August will have new series of expiration dates lining up with those dates, but it's not available yet. AMD has earnings on July 27, so let's take a look at AMD. We have July 16 and August 20. I may come back to this one, okay, because July 16, which is relatively close, is 31%. The front week is 30.8. So it's not exactly what I'm looking for, but if I was to find nothing at all, so maybe we come back and check. Dow, Billy is August 26. Okay, thank you, Ahmed. So with Dow, we have earnings on 7/22. 7/22 again, we got here July 16 with 25% and 23%. It's close, but it's not exactly what we're looking for. What about Bristol Myers? Okay, so Bristol Myers, we got earnings on August 5. And we have July and September, so we don't have what we need. And again, guys, this is the process, my friends. Remember, our job as traders is to be selective. Our job is to give a no to the trades more often than when we give a yes. This is where we stack odds in our favor. So 727 for eBay. So that implies patience. So July 16, sorry, it's 26%, 24%. So not exactly what we want. COP. Okay, COP, July 29. So July 29, we don't have it. Yeah, and it's 35 and 29, so this one is looking badly, okay? So we're gonna recheck AMD, okay? And while we recheck AMD, I'm gonna rerun the scan, and I wanna point at something that will be useful to you guys. You know, sometimes I share, you know, little tricks, if you wish. When I say tricks, I mean, you know, observations coming from experience that could be useful. I'm not saying, you know, tricks for magic, okay? There is no magic. And basically, if we do a contradiction here, okay, if we set up a contradiction, which is bottom 50, meaning very cheap options, but then you set implied volatility, the implied volatility to be greater than the historic volatility, okay, then often you find a little bit more spice on the front week expiration date, and then, you know, often you end up with what you're looking for when it comes to the arbitrage opportunity, okay? So I like to run the scan first, extreme, because the more extreme the scan, the cheaper the options, especially for that long-term expiration option. And therefore, we will benefit more from the increasing of volatility, which is exactly what we're trying to do with the double calendar. The double calendar is going to pay way more than what we see on the simulation if volatility rises, which is what's going to happen when we approach earnings. Okay, so certainly we want to do that. Okay, you run the top scan at 8 of 1 and you have a different list. Okay, you know, maybe that parameter I just pointed at, Siderman, you had it different than me. Maybe you had it as greater than instead of lesser than. Okay, but anyway, so you know, I saw AMD with a significant high probability here, and the arbitrage opportunity was not exactly there, but it was not too bad. So I would like to maybe take a look. So July 27, July 16, that's 31.81, and the front week is 31.09. So you can see that we are almost there, okay, almost there. So I want to check a bit more and look at the liquidity, which is looking fine, okay, it's looking fine. And therefore, let's give it a try, okay, let's see what we can do with AMD. So I'm gonna analyze and buy a single option. Not because we're going to do a single option, okay? What we're going to do is a double calendar, as you know. But with that single option, this allows me to measure the statistical range, which is 87.64 to 69.05. So 87.64, okay, 87.64, something like that. Okay. To the bottom one, I forgot what I said, it was 69, okay, so the easy one, so 69, which is somewhere here, okay, here we go, something like that. Okay, so that's the statistical range. Now notice that it doesn't look like we have UFOs below. Probably I need to load more data. Let me take a look at that. So to go below the dotted line, I need to go probably all the way to, let's say, July 2020, something like that. Okay, so let's load data from July 2020 so we can evaluate the UFOs below. So 07 2020 load. Okay, and yes, now we can see the UFOs below. Okay, and from there now we can start, you know, planning the trade a bit more accurately. And I think it's pretty clear, guys. We got 1 and 2 green UFOs if we use that one, and we have 1 and 2 red UFOs and 3 UFOs actually if we use that one. And by doing the trade like this, you know, we are fairly centered in the range. Okay, so I would say good enough. We got 58% probability. Now I also want to check pre and post market in case we are above 48%, and we are. Well, the UFO above is kind of the same, and the UFO below there, you know, there is another one, but you know, I guess it, you know, it doesn't make too much of a difference. If we use that one and we use that one, we should be more or less centered. Let me go back to regular session. Is that lining up with other UFOs as well? Well, that 62 is not, and that one, you know, given the overlap, it would make sense to push it here. So let's see, if I measure from this line to the current price, and I project this below. So yeah, we got a little bit of extra room there. If I go to the bottom one and I project it above, so we also have a little bit of a room there, unless I bring it here, relying on those UFOs, where now we are even more centered. So I didn't think I was going to use the pre-market data, but now that I did the analysis completely, definitely the range between 93 and 62 places us in a position which is much more centered. Yes, very good, Siderman. Thanks for confirming that. Oh, Christian, is you. Got you. Yeah, I should have thought about that. By the way, I received your email, and the answer is yes, no market orders. You got it right. So anyway, so with that in mind, okay, you know, we have two possibilities, okay? We can go ahead and do a calendar, but I'm just gonna save some time for all of us. Given how wide the range is, a calendar will not work well. So what I'm gonna do is, you know, I'm gonna calculate the midpoint and then calculate half distance between the midpoint above and below. Okay, and we can certainly do the math in many different ways to simplify it. But just to be visual, if I take 9309 plus 6284 and I divide this by 2, that's the midpoint, which is about 78, which is more or less where I am, right? Somewhere here. So now if I take this value, right, and I add it to 9309 and I divide it by 2, so the midpoint of the midpoint is like 85.5. Okay, it's about here, 85.5, which probably in the option chain is going to be 85. Okay, so somewhere here, more or less. And then if I take, sorry for that, I just keep flashing TOS and it was not needed. So if I take that midpoint and I add the bottom part, 62.84, and I divide it by 2 again, so then the bottom part is 70.40, something like that. Okay, so we are talking about something like this, more or less. Okay, so it's going to be probably 70, right, if we do it that way. So this is kind of like the strike prices that I am interested to explore to construct my double calendar. Okay, I'm going to go ahead and at that level buy, let's say we have the 85, I need to check the option chain, so buy the 85 call and sell the 85 call using two different expiration dates. And then below, let's say we have the 70, so I'm going to buy the 70 put and sell the 70 put. Okay, again, I need to check the strikes available because maybe I could get even closer to 70.58. Maybe we have the 70.5. I don't think so, but let's check. So what do we have? When looking at the longer expiration date, we do have 85 and we do have 70. Okay, we do have 85 and we do have 70. So those are the strikes that we're going to use. Okay, it's looking like these are the strikes we're going to use, and therefore I'm going to analyze and buy. Okay. And you know, you could go ahead and, you know, input this in different ways, but probably the easiest way to do it is to select either an iron condor or some sort of a combo and go ahead and make it custom. Okay, when you come here, you can make it custom, so now you can change everything inside your simulation. Okay, so first thing I'm going to do is to put the buys above and the sells below. Okay, just because I like to do it like that. Okay, there is no relevance on this. We're using July 16 and we're using the front week being June 4. I'm not going to use May 28 because I guess it's basically over. Okay, so I'm just going to start with May 4. And with the call, we said we're going to use 85s. And with the put, we said we're going to use 70s. So I'm just going to move these to the 70s and the 85s. Okay. Now, if we do this type of trade, what do we end up with? Well, we end up with a trade where the profitable range, we start at 67 and end around 89. Okay, so 67 to 89, which happens to be very close to 93, and 67 is relatively close to 62.84. I would say that's good enough because remember, when we do this trade, we are going to be rolling and rolling and rolling all the way to July every week. So every week collecting a bit more of premium and every time lowering the cost of the trade and therefore widening the range. Okay, So it makes sense to me in this sense. And when looking at this trade, the cost of it, it's 216. Okay, if you get the midpoint, and it looks quite fairly liquid. Okay, I want to check, by the way, the June 4 premiums that we get. 70. The 70 is gonna get only 8 cents. The 85 is gonna get us 11 cents only. So it's very, very shy. But what if I do this? So I am tempted, my friends, to go all the way to June 18 because I get 31.6. So I do get my arbitrage opportunity, even though I would avoid 2 rolls. So here it's 20 cents if I do June 11. If I do June 18, 70 is going to be 36, and 85 is going to be 48. So that should help the trade, you know. That should help the trade. Let me simulate so I can make my decision. Okay, so I'm going to duplicate the trade. So the one above is using July and June 4th. The one below, let me uncheck the one above. The one below is using June 18 combined with July 16. So if I do that, what happened? Okay, my range becomes about the same. 89 to 67. It's about the same. And the issue of doing that, if you think of Vega, I got 8.8 Vega. If I do my prior one, instead of 8 Vega, I get 14 Vega. So it's much more of a volatility play, meaning that if volatility increases, okay, this is gonna, look at that, it's just gonna go up big time. Okay, so there is much more impact on volatility changes. So while it looks like very little premium with a June 4 expiration, and I was about to get ready to do another one, now that I simulate, I can see that actually it's still worth it to do June 4. Actually, since June 4 is not giving me much premium, I may do a little scalp. How much I get paid? No, I'm not going to do it. 2 cents for the May, so then I'm not going to do it. Why am I looking at this? Well, because if instead of AMD, let's say it was Apple, it was Facebook, it was a stock of a higher price point, so instead of 2 cents, you may get like, I don't know, 15 cents, 20 cents, and next thing you know, so you can go ahead and do a little scalp where you enter May today to roll it tomorrow or Friday to be June 4th. Okay, but that little scalp would only work if the stock is a little bit of a higher price point. I tried. At least you got that indication for when you do that by yourself and you find that opportunity. Okay, so you can take advantage of that little scalp, but not available today. Okay, so yeah, so anyway, so looking good. We are planning on getting in this trade. Okay, I'm just gonna enter the trade on TOS. Okay, so the trade is gonna be done by using the 85s and the 70 strikes. Okay, the 85s and the 70 strikes. This trade is a trade using AMD. This trade utilizes July 16. So right click to buy. Sorry, to buy. Here I'll enter it as a double. Here actually we can select double calendar. So this is what I'm gonna do. So we got buy, sell. We are doing. We are buying July 16, and we are selling June 4. We are doing the 85 strike for the call. Okay, so call 85. And we are doing the 70 for the put. So 70 right there, and that is a debit of 2.13, which I believe is the midpoint that we saw earlier on TradeStation. 217 right now. Okay, so 216 as we speak. That's the midpoint. Okay, so I'm just gonna get the trade in. Okay, I'll give you just 1 second in case you want to take a screenshot. Actually, let me be a bit more generous than 1 second. I'll give you a few moments to take the screenshot. Then I'll switch to TOS in case you want to take a screenshot too, just in case this is a bit too rushed, because I am indeed moving quick. Okay, so here is TOS, okay, and I'm about to confirm and send, but again, I'll give you a few moments to take a screenshot. Very good. So confirm and send. I made you off, Joanne. So anyway, so the order is in, waiting to get filled. Okay, let's see if I get filled. If I don't get filled, I'll make it a market order just to get filled before the end of the session. So we have it, so we can practice it together. Remember, don't use market orders yourself. Use limit orders. And if any, you can always rectify your price, okay? But don't use market orders. So, so let's do that. You know what? Let's do it. So it shows us 216. So let me make it 216. Right click, cancel, replace. 216. Let's see if that goes in. And if it doesn't go, I'll change it again before the end of the session. Okay. Cool. So anyway, AMD waiting to get filled. And therefore it's time to add AMD to our list. Okay, and now I'm just gonna start working on other potential opportunities, which is also the time to say goodbye to the ones of you. Thank you, Joanne. Say bye to the ones of you attending from the public streams. I will see you tomorrow, my friends. Thank you for joining me. Let's continue now with other trades from the rescan I have done. Again,